You do not expect somebody that's 98 to have the same level of abilities and energies that you do that somebody that's 48 or 8 years old. It's going to be different at every part of the life cycle, and currencies and the markets on which they are based are no different. So who's going to start lowering rates first? Whichever economy goes into a massive crisis first. That's the one. Whether it's the US or it's Europe or it's anywhere else in the world, we have been going lurching really from crisis to crisis, and that's created a level of complacency in the public, and I think that's partly by design. But when you see really what's happening, what if they pivot? I mean, what if they just stay here for a while and then they start to drop rates? What is the implication of that? And that is that inflation on a broader scale and on a more rapid scale will shift and come back. So there's no way to fix this because we're at the end. Everybody thinks they're going to know like 1 second before, and then they're going to have time to buy all the gold that they want, all the food and water, and that's not the way life works. So I never care about being early. I'm a technician. I've been in these markets on some level since I was 10 years old. That is 59 years, okay? And I got to tell you, I would rather be 20 years, 30 years, 40 years to think about this. When I first came to ITM in 2002, spot was trading at about $250 an ounce. Now it's somewhere near, 2000. What was the best time for me to be accumulating, right? So was I early? Uh-huh. Do I care? Uh-uh. If you've accumulated gold and silver and you have all those other things in the mantra, that's what helps me sleep well at night. It's what's happening in the treasury bond market that people can't see because they cover it up. And even more than that, what's happening in the quadrillion, I can't tell you how many quadrillions, and nobody can, in the derivative market that's based on interest rates, which were held at those low levels for 15 years, and all of the bonds that the banks are sitting on at 0% interest rates, bond principal, market value that are in the tanker. So will they pivot and lower rates? Well, they're going to have to, because otherwise you're going to have the entire banking system collapse. And we just got a little snicker snack of that. Do you think that that's over? No. Do you think it's just in the local small banks, community banks? No. That goes to the highest level of banks, including the Federal Reserve. It's really kind of interesting because the whole world is following Japan's lead, and they've created this whole alphabet soup of stuff that really, as we're sitting here now and looking at it, and this started back in the early 90s, it doesn't work. So I would say, yes, the whole world has been following that blueprint, but I think that it's really about keeping this together just enough so that there is a massive crisis, people get scared enough, and then they accept this next iteration, CBDCs. So what just happened yesterday, what has really been happening since, what was it, I think 2000, is that the Federal Reserve has been buying Treasury debt. Now, suddenly, and that is not a good thing. I mean, that's what third world countries would do because there was not enough global buying of their debt. So do I think we're following the path of Japan on a global basis? I have to say, yes, we are. But do I think that it's going to last as long as it has in Japan? No, I don't think so. We have choices at this point. We're not always going to have these choices. But at this point, we vote with our wallets, right? And if you buy gold and silver, which is what I'm doing, That's my vote. I am getting to safety. This is the key safety trade. Look at what the Bank for International Settlements says. I mean, they say that gold is the only, not one of two, not one of three, not one of 100, the only financial instrument that runs no counterparty risk. I don't care whether it's dollars or Canadian dollars or euros, or it doesn't matter what it is, yen, it doesn't matter what it is. It's all backed by the government's ability to create more debt. And the solution to every single debt crisis that has come up, including right now, is enabling even more debt accumulation. Does that really solve the problem? So honestly, what keeps me up at night is not that this isn't going to happen for another 12 years, because it is already happening. And that's the piece. If they could keep it covered up, then even extraordinary people that are paying attention like you think that nothing is happening, thinks that they're holding it all together. But what keeps me up at night is that flippin' 10-year treasury market, because that is the foundation of the global markets. The foundation is crumbling. When do you want to know about it? Because I've been working on my urban farm. I mean, do I look like a farmer to you? I mean, seriously, do I look like a farmer?
You clean up nicely.
I clean up nicely. Well, in reality, because of my studies of the economy, I was crystal clear in 2010, crystal clear. Here in the US, you had the regional banking crisis, but we're also seeing on a global basis what's happening in the real estate markets, which is that they are starting to turn around and fall. And considering that globally, real estate is such an important sector in the global economy, what in the world is going to happen, next? Well, I think it's going to get a whole lot worse next. I mean, all they've succeeded in doing is in some areas shifting inflation so they can say overall, like in the US, we're at 3.2%. But what people on the ground now know, because of that huge rapid rise that we had in inflation, you don't see prices dropping. It's just the rate and speed at which they are going up. It's not as fast. But in general, globally, people, the general public, is really, really hurting from these massive price increases that we've seen over the last year or so.